As expected, the Federal Reserve making another big rate hike today, raising the key interest rate another 3/4 of a point for the third straight time.
The move boosted the short-term interest rate, which impacts consumers and businesses, to more than 3%. Experts say that rate could rise above 4% by the end of the year.
So how does this impact you? It means people looking to buy a home, a car, or borrow money will pay more.
NBC5's John Hawks spoke to an expert about the Fed's historic move.
The Federal Reserve raising interest rates 0.75% for the third consecutive time this year, as the central bank moves aggressively to tackle rising inflation.
We anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%.
Affecting the way people will buy homes, cars, and borrow money.
Yes, they will affect inflation precisely because they're going to suffocate the economy with big implications for Vermonters, right? Large increases in interest rates make it difficult for anyone making a purchase that's financed on credit.
The higher rates are going to make people's borrowing decisions harder.
The folks who are sort of just indifferent between borrowing and not borrowing, they're going to not borrow, right? So if you're thinking about a new car and you could just afford it at previous interest rates, then that's no longer possible.
For people looking to buy houses, it's going to get a whole lot more expensive.
The rate hikes are having the most impact on those that are the least served in our communities. And that's something that I think the federal government and a lot of us overlook, to be honest with you.
According to Vermont Housing Finance Agency, about half the number of renters can afford to purchase a home this year, as opposed to last. And this hike will only make it more expensive.
It'll probably take some of our buyers out of the marketplace. They'll probably have to continue to rent for the next couple of years. If you're looking at the middle of the market, it's probably not going to have too much of an impact.
However, historically, this mortgage rate is low compared to the nearly 18% in the 1980s.
Even if it's at 6%, if you look at the last 30 years, a 6% interest rate is actually still pretty good money. It's still a pretty good rate.
In Burlington, John Hawks, NBC5 News.